guys, welcome back to the channel. Welcome back to another video. And this is going to be part 2, guys, of pound JPY backtesting. So if you have not watched the first video, I'd highly recommend go back, watch the previous video to this. It'll have part 1 of backtesting pound JPY. So this is part 2, the second week right after that. So we pick up literally right after the first week on pound JPY. So let's continue to break down pound JPY and let's see what kind of setups we can find this particular week and what do the setups look like on this pair. All right, so without further ado, let's get this started. So I mean, just by looking at this move here, what's your only option? What's the only obvious option to trade?
Be a type 2 setup to the north side, right?
Be a type 1.
A type 1 to the north side, yeah.
I mean, this only gives you essentially one option, right? You're looking for that to happen.
Yeah.
So whenever this stuff happens, I mean, obviously this is the only. It makes it simple to see. Okay, well, shit, I can only get a W out of it unless you get something that's like this, and then the U.S. session comes, and then you get like a continuation trade. You know what I mean? That's really the only two things that you have. And it's really, you can see we're testing these lows here, and then ultimately, I mean, there's a bunch of structure that we can test out on this week. Really more of the this 800 here. You see that? You're almost to that 800 on the 1 hour time frame. This could be your second leg here.
Mm-hmm.
You see that? What would make this any better? I guess what would make it, is there anything that would make it a better confirmation?
Go to a smaller time frame and verify the structure there. See it clear.
Yeah.
Like on the pins, because those pins, you might see what you're trying to see on a 15-minute just for a better entry, and you have a tighter stop loss if you're wrong.
Right, right. Also, I mean, I think I stopped this kind of early, but I'm going to assume that the next candle is going to give either a doji or another, or a bullish. You know what I mean?
Yeah, I was looking for a star.
Yeah, exactly, a star pattern. Yes, exactly. Yeah. Either another doji or another bullish candle to help with a star pattern. Right. So there you go.
Yeah.
But you can see
a wick.
So. Yeah, it's also a wick, right? So you can see that they're not wanting to go lower than that.
And this is like your range right here. So everything's saying that it's going to go long.
There's your divergence there. Yeah, exactly. So, and you'll notice this a lot, by the way, is that a lot of times this big move happens always on the first leg, on the TDI. Right, and the second leg is always like up here somewhere. It's already way advanced or whatnots. But yeah, you would need a pullback for sure to even make this. Where would you take this to is the next question. What's the stop? You'd have to go to the 800?
Top of the Asian session, maybe.
Right, to the middle of the Asian range. The middle of the Asian range is your 35 pips.
Okay.
That'd be a 2-to-1 risk to reward ratio. If you get that's if you get a pullback on the next candle to at least get you a better entry.
Right.
If you don't get a pullback, then it kind of throws everything off because now you're 22 pips.
Yeah, that's too much.
But you would definitely want a pullback so that way you can get a better entry. So, I mean, you're looking at close to, 17, 16.
I would lower it a little bit more to the body of the large candle. But, yeah.
Yeah, so you got to pull back down to here. So yeah, that would make sense.
Like the other person was saying, I mean, you probably drop it down to the 5 to see what's happening.
Yeah, exactly.
And on these wicks, you'll probably get a star or a railroad track if you drop it down to the 5 minute.
Ultimately, it looked like it almost went to the 800 or to the 200. So it only went up 28 pips over after its second drop here.
TDI is still giving a bullish formation with the expansion on the Bollinger Band, so it may go up a little bit higher.
Right. So, well, here's the thing, right? This is a good example to bring this up on as well. Is that if you find yourself in a situation, right, where you take a trade, it goes up, but then it comes back down again, right? You got to ask yourself. Let's say you're getting close to that six candle whatnots, and then say you get out of the trade, right? You exit out of the trade. Let's say this is what is this? 1, 2, 3, 4, 5, 6, right? So say you get out of the trade here, it's a small loss of like whatever, 5 pips or whatnots because of the 6 candle. But then you notice that the low was never taken out. You know what I mean? So you got out because of the 6 candle where you don't want to, you don't want to be stuck in this. So you got out early, but then you notice that they really just came down for like a third time, right? And they came back up. So if you ever experience that, or if you ever see that, and you notice that the low or the high, whatever you're trading, never gets taken out, like it's okay to re-enter the trade. You know what I mean?
Yeah.
Because you know the behavior, you know what's going on here. Because why would they just come back down straight and then all of a sudden you reverse again? Like that doesn't make any sense. If they're gonna go down, damn it, they're gonna go down, right? There's no reason to stop here. They'll take out the low, but they didn't take out the low. That low held still. So if that ever happens to you and you find yourself in that situation, don't be afraid to go back into the trade. Because I mean, ultimately, it went back up to the 800 or back to the 200, I should say. But just if you find yourself in that situation of the low or the high that you thought was the low or the high at that time, and it still is that, it never gets taken out, don't be afraid, um, you know, don't be afraid to jump back into the trade. And you could even, as a precaution, if you wanted to, you could take the trade again, but you could even lower your risk by lowering the lot size. You know what I mean? So let's say if you're normally trading uh, 0.1, 0.10 as your lot size on this first trade here. On the second trade here, if you wanted to go back in, you could do maybe half of that, right? So you can do 0.05 instead. So there's multiple ways that you can go in it again and still lower your risk.
And you would lower your risk anyway because your stop loss would be very low.
Yeah, the stop loss would be very low, and that stuff. Yes, so that's also true as well. Just notice where did they go? Right back to that same low, right back to that same low. Do you see that?
So this would mean there's another consolidating market because the Tuesday is not breaking the high or the low.
Or still early, right? Because I mean, shit, this could end up taking off. You know what I'm saying? This could be obviously the only thing that you would want to trade here is like same thing as a type 1, right?
Right.
But this type 1 could literally go the whole day.
Right.
So you don't know that yet. But if it were to do, a situation of that type 1, if let's say you get a type 1 during that day and it only goes up to here and then reverses back down again, then you kind of got yourself in a scenario where, yeah, you could have another, um, movement sideways of that week again,
Yeah.
or whatnot.
So basically on Monday and Tuesday, we're playing the daily formation. And then by Tuesday, we have a sense of Wednesday, Thursday, Friday, where it's going to
Yeah,
go.
you should get a sense of where, of where the rest of the week should be going. And honestly, I mean, the only way that you're gonna get that kind of sense is because of the back testing that you've done, because you've seen it over and over and over and over again.
Right.
This whole thing, man, is so repetitious based upon how much back testing that you do. The more back testing that you do, the better you're going to get. That's just a fact.
Right.
The least back testing that you do, the less better that you're going to be at this. And this is with this strategy, with any strategy in trading that you do. There's nothing that you can put, that will replace your ability to back test. And that's just in the sense because if you want to front test, you can, right? That's great. But obviously, it's going to take freaking years, right, for you to front test something because you're literally waiting every single day,
Right.
right, for price to like start moving and shit. While back testing, you can automatically go back 18 months, or if you have the other software, you can go back 10 years if you want to. You know what I'm saying?
Right.
So imagine how much if you were using MT4 and the soft 4FX software on that,
Yeah.
you go back 10 years, like how much stupid knowledge would you have on that one pair for you to go back, 10 years and you back test 10 years on that one pair? Like,
Right.
be stupid genius on that one pair. So, especially if it's a pair like, what is it, like pound AUD or pound NZD, any of the AUD or NZD pairs that move during Asia. I mean,
Right.
you can pretty much trade any of those pairs pretty much anytime throughout the day, really, because it's
The problem with the NZD and AUD is they're very volatile, and they usually start in the Asian session to
right.
move.
Well, that's my point, is that you can, because of the fact that they're you know Australian and New Zealand, the moves start a lot of times in the Asian session. So if you were gonna at all think about trading Asian session, those would be the only pairs that you would want to trade,
Yeah.
because they actually would give you production, within that time sessions or whatnots.
Right.
But yeah,
Remember last year when the pandemic was holding, the Aussie dropped so drastically the pound Aussie went like 800 pips in a day.
yeah,
And that was for 3 or 4 days in a row, the
right,
same amount.
yeah. So I mean, if you ask like Eric, who trades pound AUD, he's doing uh, what are those things? Oh my god, it's like FTMO but with a different company,
Right.
and he's doing that. All he trades is pound AUD, but I mean, he literally trades it off the hour chart, but he's trading it at any point of the day because he's went back tested the hell out of it and knows it.
Right.
It's the only thing that he trades,
Yeah.
So
Makes sense. Yeah.
on this pair here, I mean, we're in the New York session. You could see we had basically a move up and then back down now. The only option that you would have here, I mean, at least for me with this EMA being here like this, would be more of a buy than a sell. And so that's the only thing I would be would want to do at this point on this particular
I mean,
pair.
the 800 EMA is the real test, right? It's spinning to that. So
Yeah, the
depending on what
800
it does.
EMA basically is your, your support essentially,
Right.
your floating support for that in the U.S. session. So, the question becomes, can you get? So you got to think what's you got 15 pip range here, and let's say you're going 2 to 1, which is like that 30. I mean, you'd want to get. You can go up technically, I mean, you can get in right after the candle. You could still have a 14, 15 pip stop loss. You're just getting up to the highs here. So, I mean, ultimately, though, it would be best, obviously, if you can get something down here because now your risk is like stupid small,
Right.
But all the way up here, it's not like impossible, right? It doesn't make it outside of belief of what you could possibly get on the pair. It really just depends on what time you're paying attention to on the charts here.
So on the TDI, the yellow line, which is the long-term sentiment for the market, doesn't play any role, right? The yellow line.
Well, the yellow line, right, is the overall sentiment of what most traders are doing,
Right.
right? So most traders are starting to look for sells instead of buys.
Correct.
You know what I mean?
Yeah.
Is what the retail traders are doing right now.
Right.
On this. So
But the decision making, I mean, like if the yellow line is pointing down, that means the overall market is bearish. Right.
Yeah, I would say you want to look for if this yellow line is below the 50.
Right.
That means that the market itself, right, is more bearish than bullish. You know what I mean?
Okay.
But for me, when I'm using the TDI, I'm really paying a lot more of attention to where is this green line at in comparison to the white lines. You know what I mean? Or the
Okay. So you're
middle
looking at
line.
the current
Um,
sentiment, not the
yeah,
overall.
because I'm more worried about I'm trading this. I'm not trading this. I'm not trying to hold this for a day or two. You know what I'm saying?
Right.
If I'm trading this intraday, then I'm just wanting to get in and out. So I'm more concerned with, can I use this to help confirm what setups that I'm wanting to get out of. So in this case here, like I'm looking for a continuation trade, and this is bouncing off the 50.
Right.
So as long as this line is staying here, and this is almost like where this 800 is right there acting as support. This yellow line here essentially is doing the same thing for the green.
Right.
Is acting as support for it. You know what I mean?
Right.
So it's just really about what candle pattern would you really want. This gave you a little bit of a pullback here, but I mean, it's really goes down to what have you seen over your back test, and that makes you feel the most confident in what you're trading.
Yeah, I use the red line really. If the red line is sloping up and the green is above the red, there's a bullish for the day trade.
Yeah. Yeah, I mean, think of this green line crossing the red.
Yeah.
Think of it as like the 5 and 13 on the TDI.
Yeah.
Basically, you know what I mean? That kind of scenario like that. Yeah. So I mean, this one even went up higher. This almost 50. So
The thing is, it went to the high of the, our range and then dropped back.
Yeah. See, it went to the high of that range. Yes. This was yesterday's high. Previous week's high is right above it.
Right.
So yeah.
It looks like a consolidated market now, right? Because Tuesday really just went sideways.
Right. It does look like a still right consolidated market because I mean, you're working within basically that range. This You know, that's your range right there, right?
Yeah.
So unless it breaks out of that range, you're basically consolidating back and forth, back and forth, back and forth.
Right.
And this is also you'll see this a lot as well. Is that
Squeeze is happening. Yeah.
it'll start to squeeze.
Yeah.
The only good thing about the squeeze, obviously, is that when it squeezes, there's going to be a breakout.
Correct.
So on this, you know, on accumulation cycles, you can go both ways. I mean, the real subject on accumulation cycles is when you're taking the trades, you want the trades to be very clear and very obvious because you can go either way, up or down, buy or sell, buy or sell, buy or sell, back and forth, you know?
Yeah.
So the pattern becomes super important. The clarity of the pattern becomes super important, and how many confirmations can you get to go along with the pattern that's going to help you get the best possible trades in that accumulation cycle. All right, so does anybody see that? Where are they targeting to again?
Yeah.
You can see this is already starting to come down. We're already
Looks
in
like
that,
it's going to turn around for the U.S. session.
right. We're already in that range essentially. So you could see that what this is doing here, it's like almost the way that TDI read it is that it's reading it like this, right? What I'm reading it is if you go to the line chart, you see,
Yeah.
it's a
I
little
mean,
bit,
TDI did that too. It did a slight dip
yeah.
and then went up.
So what I'm looking at here is, you know, this came back up, came down again, kind of like essentially like what we had here.
Yeah.
Where we had the 800 acting as
Support.
support, basically. You just don't have the TDI there with you on this one to help you. But anything like you see this right there, see the behavior here of pin, 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 solid, and then pin it again. You see that? So anything like this becomes where you could see the behavior and you can start to be like, okay, what's my what's my risk reward on a trade? You know, what would make sense essentially? Because if you're doing, let's say, if you take advantage of a pattern like this or a pin bar like this, I mean, now you're looking at like 10 pip, like a 10, 11 pip stop loss, and then, you know, a 2 to 1, theoretically, you can just go to here, you know. I think the question that I would have is, you know, will it get past this, or will it just do this basically and flat out? And if it does do that, by the way, if you take a trade like this and then it flats out here, I mean, just take your whatever 5, 10 pips out and just call it a day. Like it's not that big a deal. Tomorrow's another day, you know. But the most important thing that you're going to learn is recognizing the behavior. If you can recognize the behavior that happens within the boxes, I mean, forget it. It'll change the way that you look at stuff for sure. And so this one went up even higher. So almost 40 out of that one.
This is the top again.
Yeah, it's a top again, exactly. Top again. Now, did anybody notice something? I only bring this up because I just noticed it. Does anybody notice something? Like goes from here, shorter, gets shorter, 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 shorter.
Yeah, momentum is decreasing.
See that?
Yeah.
So what is
Probably a
that?
wedge on the 4 hour.
Right. So what does that generally? What would that mean?
It's a drop.
You know?
Hard ceiling, soft floor.
Yeah. So if you've ever studied Elliott wave, right, is whenever you have like a correction like this, that's just basically like slow, steady, slow, steady, slow, steady, slow, steady. It's not like an impulsive move, like a straight up move like that. It's just slow, steady build. Generally, it builds out to be a pattern of a drop at some point. You know, it's almost very mindful of what's actually happening on Bitcoin right now, where you're having that. It's building out this correction here. The problem, you don't know how high this correction is going to go. This could go up to here, but then it'll do that. You know what I mean? It's a very corrective pattern. So it's the same way. It's a very corrective pattern. Look at that.
News.
What's that news?
Probably news kicked off.
3:30. Yeah.
Yeah.
Look at that. That's it's an 18 pip candle there, and bouncing off the 50 there. You see that?
Right. And it broke the top.
Yeah, huge candle there.
Going to come back, test it, and then either probably bounce off of it.
Now, what I'm looking for, what would you be looking for here? If you zoom out, what are you looking for? What are the possibilities? Is there a possibility of any trade at all? What's the best possibility for a trade?
And technically speaking, it has to test the break of that top and then bounce long from there.
All right, so you're thinking long, right? You're thinking
Yeah.
buys, basically,
Yeah.
because it's broken the top out of here, right? And it's just
All the moving averages are fanned out, so the bias is to the upside.
right. So, what would we want? This is probably gonna if that's the case, what you're saying, right? If this doing this is probably going to act as floating support.
So, right.
You know. So you need some kind of yes. Well, no, some kind of a pattern has to develop here. Something they got to give you something here. For you to you got to see the behavior. Basically, is what I'm saying.
Yeah.
It's just movement sideways, 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 like that.
Yeah. There's the rejection right there.
That right there is what you want.
That's a railroad track with a long wick.
It's a long ass wick.
Yeah.
That's like a 30 pip wick, right?
Yeah.
Or 20, no, it's 17 and a half pip wick.
Yeah.
17 and a half pip wick.
And you got a divergence on the TDI. Lower lows and higher highs on the TDI.
So I mean, what's the setup? Is there a setup here at all?
No. I mean, it's a railroad track, so on the body of the candle itself, so railroad track.
So here's what I would see here, right? Is I see this as their last one of maybe their last attempts to try to get people right
Short. Yeah.
into and short, because you got to think that literally this candle, this whole candle here, at one point was solid red like this.
Yeah.
Right? How many people do you think got trapped in that candle?
Yeah, they probably went short when it broke the support of the channel there formed.
Yeah,
on
as
the
soon
side
as
to
as
side.
soon as it broke, as soon as it broke this, right?
Yeah.
They went short. I'm just going to assume that, right?
Yeah.
So I think this is one of the things that I always tell everyone is to, if you're going to make a trading decision, right, of entering a trade, exiting a trade, whatever, just make sure you do it after the candle is done, right? Don't make a trading decision based off of an open candle still.
I usually wait till the last minute of the time period,
You know,
because that's when they make the move one way or the other.
so wait for the stupid candle to close, and then you can make a trading decision. But don't make it when the candle's still open, because this very easily could happen. Happens a lot,
Yeah.
right? So then the question is, okay, well, is there any setup that you can take here? Because obviously you can't do this.
No.
That's not going to make any sense.
Use
right?
the 50
So
as your stop loss.
you can use the 50 here, right? So you can use this 50 here as your stop loss. If that's the case, okay, where would you go then with this? Like, if we go back, let's go up to a higher time frame real quick. Where would you go with this? I think this kind of gave us our answer, didn't it?
Yeah.
Because that's a 1 hour time frame there. Yeah, it did. So if we go back, we'd have to go back where? All the way back up to here.
So there, right at the top there. Yeah.
So somewhere here, and I'm just going to put this here just to see where this is at. Yeah, so this, right? And I mean, damn near, look, you can see 30 pips almost to the dot.
Yeah.
So that would be your next target. Is basically you're using the closest 1 hour structure that you could see if you go back, which is up here. And then after that, obviously, would be like somewhere up here, somewhere within this entire range here.
Yeah.
And you got to pull back on that one too.
And you already hit your profit. The beauty of this was the TDI showed a divergence on that long wick.
Yeah.
So it gave you some confidence that you're going the right way.
Friday. Yeah, Friday.
It's going to test that top line and then drop.
So, I mean, here would be, I mean, at least this looks like maybe a first leg here.
Yeah, the entry is right at the line.
Right.
On the pullback.
So, you still need confirmation here.
And TDI is diverging.
No,
dang.
not yet. Not yet, my friend.
Yeah.
Not yet. So let me ask you a question then, because I think this will bring up a good point. Is why not? Why would you not take an entry after this candle as a sell entry, I would say. Is there any reason what would essentially stop you?
Well, it hasn't broken that line, that support level. That was one reason. It could bounce right off of that and would keep going.
Mm-hmm.
Second one is that you're approaching the overbought in the TDI, but it's still pointing up.
Right. So for me, here's, I think, the biggest clue for me of why I tell you guys to make sure that if you're going to trade, let's say, a second leg, because I'm sure some people may be looking at this particular point in time and it's like, that's a second leg railroad track.
Yeah.
Right? But what's wrong with it?
It's not long enough.
Exactly. It's not long enough. It's not long enough. Right?
So if the next candle covers at the bottom, would you combine it?
No, this is not long enough.
Okay.
Right? This would needed, the correct one would have needed to be like this. Would have needed to be more like this.
Oh, less than the 50%. Okay.
Something like that to at least say it's a railroad track. Right? Because you can't have you can't have a railroad track that is, like that. That's not a railroad track. What's the whole purpose of a railroad track is for them to either be equal or pretty damn close to being equal. You know what I'm saying?
Yeah.
So that would have been the first thing. Second thing is that it clearly blew the top.
Right.
Like if this would have if this section here would have been a pin bar, that's a whole different story. Right? Yeah. But it blew through that high there. So that's not the real high. You know what I mean?
And also the red bar didn't break or close below the support, so it bounced off the support.
Yeah. So I just want to bring that up because I know that would take, put in a lot of people into that trade.
And here's a pin bar. It took out all the buys.
Well, it's 4:30 news, that's why.
Yeah.
Holy shit. Look at that. Any guesses? How many pips do you think that is?
About 35, 40 pips.
Nah, bro. It's like 60. Yeah, it's like 62 pips. That's just the body.
I took out all the candles from the Asian session.
Took everything out. It's like a 76 pip candle. I mean, that shit took out like all of Asia and half of freaking
US.
New York session. Wow. All right. It does eventually. Yeah.
End of the day.
Look at that. Big, humongous ass.
It went right to the open of the day, didn't it? No, open of the previous week.
Almost, yeah. Almost. It was it opened here about 21 pips away from it, yeah. But there you go. All right, guys, welcome back. So as you saw on that particular week, we ended up getting, I believe it was four setups, and you saw it was pretty much a trending cycle for that specific week. So as you can see, we started to incorporate more of the higher time frame in this week, and also looking back at structure, which I think is hugely important, especially when you start to break out of certain ranges, and you're going to need the higher time frame analysis and the higher time frame structure to see where is price going to, or where can price get to. So I hope that these two videos helped out a lot with finding what you need in trade setups, specifically with pound JPY. If you like the content, guys, please like and share the content, as well as subscribe to the channel. If you're new to the channel, make sure to go to the Trading with Market Makers playlist. It'll have the entire strategy there for free. Once again, guys, thank you so much, and enjoy the rest of your day.